What is going on, my stock market bulls and bears? It is your boy Terry Stonkers, and welcome to my channel, baby. Buy the dip. All right, guys, I'm going to bring you something very special today. I'm going to talk about a strategy that I'm going to start doing weekly, and it's going to be selling options. So I'm going to go over my history of week one and the profit that I made and the contracts and options that I did select. And I'm going to start doing a weekly review of this and see how it goes. Week one has went fantastic. I did 4 contracts and they all expired worthless, which of course, when you're selling options, it's perfect when they expire worthless. So, hope you're all ready for today's video. If you are, smash thumbs up, leave a comment down below. It helps out the algorithm. Okay, so as you see, I made this little spreadsheet here of my week one. This first option we're going to discuss is I sold a cash secured put on Robinhood, ticker symbol OHHD, at $11 sell cash secure put. I did that contract on January 24th on Monday. Now, if we go over here, you can see here is my Robinhood account. I have converted this strictly to options trading. That's right. And it's going to be selling options mainly. So here you go. On January 24th, I got this contract filled at 10:36 a.m. I received a $93 credit. And as you can see, that's what we got here, $93 credit, contract done January 24th. So let's go take a look at Hood stock. On January 24th, I think Robinhood was roughly right here. So I sold the contract right here around 10:30. Robinhood was trading at $11.47. And I did a put option, which means if Robinhood fell below the $11, I could be forced in purchasing the 100 shares of Robinhood at $11. But as you can see, I sold this cash secure put. I got the $93 credit. Robinhood went up. It kind of was hanging around the $13 range. It did start to sell off a little bit. And as the earnings, it got a little scary on Thursday because it sold down to $9.97. But then the market realized that it was very oversold. And I think a lot of shorts were covering on Friday, and that's what brought the stock back up. So as you can see, a part of that, the stock ending at $12.73. And my put option was for $11. So Robinhood finished the day above $11. So that contract expired worthless, and I collected the whole $93. Didn't have to worry with it. That was my first trade that went fantastic. All right, guys, we're going to go over trade number 2 in my weekly options. This is another Robinhood. We sold another cash secure put. I received a $34 credit, and I did this contract on January 27th on Thursday. So here we go. Right here, filled January 27th at 1:48 p.m. I received a $34 credit, and what that means, guys, if Robinhood was below a $10 strike price on Friday, the 28th, I would be forced to purchase 100 shares at $10 a piece. So yes, I did have to put $1,000 in collateral up. And as you can see, here around the 2 o'clock range, Robinhood was trading at $11, $11.50, somewhere in that range. And they had earnings and it did drop down, so it got a little scary. But then the market realized it was oversold. It shot back up, and that contract expired worthless. So I received the $34 credit. And like I said, guys, that contract was done at almost 2 o'clock, roughly, on Thursday. And you only had to make it to Friday. I mean, 2 hours of trading left on Thursday and a full trading day on Friday, and received a $34 credit. So I was happy to do it. I felt it was very low risk because, like I said, the worst came to worst. I would have been forced to buy Robinhood at $10, and I was not forced because the stock ended up above that. It ended at $12.73. And yeah, that trade went very well. So let's now go take a look at the next trade. All right, guys, if you're enjoying this content, please smash a thumbs up, leave a comment down below, man. It helps out the algorithm. And real quick, before we go into trade number 3, one thing I got to point out that this is going to be considered short-term capital gains because you are realizing these gains of the credits you receive. So keep that in mind. I'm not really worried about it because, as we know, 2021 ended pretty poorly. 2022 is starting out poorly. And we have so many losses from 2021 leading into 2022 that there's a little bit of premium that I'm going to be making. It's just going to help recoup a lot of losses that I got last year. So like I said, my Robinhood portfolio is going to be my selling options kind of portfolio now. And I do have stocks. The stocks that I do own in here is ones that I'm keeping an eye on for options, or ones that I'm looking to possibly buy with the premiums that I make for long-term trading as well. All right, so I got my Fidelity portfolio, which is my long-term kind of buy and hodl in there. All right, guys, so let's go take a look at trade number 3. AMC, that's right. I entered this contract on January 27th. I received a $35 credit, and I sold another cash secure put at $14, which means Robinhood held $1,400 as collateral because if AMC ended below the trading week on the 28th at $14, I would be forced to buy 100 shares of AMC at $14. And here you go. AMC $14 sell put. This was filled January 27th at 1:17 p.m. There you can see I got that contract filled. I received the $35 premium. We go here and look at AM stock on Thursday around, here's the 1:30 area. The stock was trading at $14.81. So I did this contract because keep in mind, guys, if we go here, if I received a $35 credit and AMC stock was a $14 sell cash secure put, my break even was going to be $13.65. So if Robinhood was below the $13.65, I could be forced into buying the stock. But it was trading at $14.81. At that point, I said, you know what? If it falls below it, I will be okay with buying it, because then the next week I just would sell a cash secure put. Sell a covered call, do the opposite strategy. As you can see, that contract being filled about 1:15 roughly. It only had another day and a quarter to survive. AMC ended up 15.06. So that trade went very well. And my money was released back to me to the capital, and I got my $35 credit back. So another fantastic trade. Those were my three cash secure puts, guys. Now keep in mind, when you're doing that, you have to have enough money as collateral to have Robinhood hold in case you're forced to buy the stock. So like for that first hood, that's $11. That you have to have $1,100 collateral, $1,100 cash in your account ready that Robinhood could put on hold to receive your $93 credit. Same with that hood, $10. You have to have $1,000 of cash ready in your account of buying power, because they have to put that on hold in case you're forced to buy the stock at that price. And then same with AMC. You have to have $1,400 cash ready available in your buying power in case you are forced to buy that. So your money will be placed on hold as collateral as you do these contracts. Once they expire worthless, Robinhood releases all that money back into your account, and you already get your credit as well. So now we're going to go take a look at the next trade. All right, now we're going to talk about trade number 4, and this one is a little different, so let's get in here to it. This one, guys, we actually sold a covered call. Now, what this means is, in order to sell a covered call, you have to own 100 shares of that underlying stock. So what that means is, I currently own 100 shares of SOFI, and I had to put up my 100 shares of SOFI as collateral, because what that means is I entered this contract on January 24th. We go here to look at the contract. This contract was filled January 24th at 3:45 p.m. I received a $63 credit to do this contract. Now, what does that mean? We sold a covered call. That's different. So selling a covered call, as you can see, it was a $13.50 strike price. If you add my premium of $63 that I got, my break even on this contract was $14.13. So let's say SOFI ended at $15 on the trading day of Friday the 28th. What does that mean? I'm going to be forced to sell my 100 shares of SOFI at $13.50. The buyer on the other end of that contract gets to collect that difference between the call strike and the premium. So they're basically going to make about $87 because my break even was $14.13. It's at $15. The buyer is going to make money on the other end. Now, as you can see, you would think I'm some kind of genius in timing these options. January 24th at 3:30, SOFI was trading at 13:01, and the stock was kind of trading up through here, and I did that contract, so I got the good premium. And then I don't know what happened, but SOFI just entered a bear trend the whole way down. Now, as you can see, my stock was trading at $13, and now it's down to 11. So I have technically lost a little bit of money on the underlying stock price, but technically, guys, you know, guys, you never lose. You never lose until you sell. So what I'm looking to do is I'm going to hold. I have those 100 shares. I don't want to do a covered call when SOFI is trading down so low. Probably what I'll be doing this week, like I said, I'll try to keep you up to date on my plans. I'm looking to probably sell some cash secure puts on SOFI, because if it goes much lower, I'm totally okay. As you can see, with Hood and AMC, those stocks kind of went up. So I'm going to see if they take a dip. And that's kind of what I like to do. If I see stocks dipping and they're on the dip, then I'm going to sell the cash secure put on the dip. I don't want to sell a cash secure put on a stock when it's on the rip, because then it's more likely going to come back down during this bear market. So as you see down here in my notes, the total premium collected for this week was $225. All contracts expired for profits. And I like to do weekly options that expire every Friday. That's what I'm doing, guys. I'm not doing contracts that are 2 weeks, a month, or whatever it is. I'm doing contracts that expire weekly. So as you see here for my strategy, I did 2 contracts on Monday the 24th, and I did 2 contracts on Thursday the 27th. And you may be asking, Terry, why did you do that? Because in a bear market, I want to be careful. I don't want to put all my eggs in one basket on one trading day. So I did 2 trades on Monday, and I waited to see what the market was doing, and I did the 2 other trades on Thursday. Now, I can't say exactly what I'm going to do this week with these trades, because I'm going to take it as what I see the market's doing and kind of going from there. So I'm sure you guys are going to have a lot of questions. Please leave them down below. Please consider joining the Patreon group. I can answer all your questions on there, and I'm hoping to get the join button to get a community tab here on YouTube as well, because I want to help people out during a bear market, how we're going to make premium and go over a lot of these strategies. So hope you all enjoyed today's video. If you did, smash thumbs up, leave a comment down below. It helps out the algorithm. So I'll catch you guys in the next video. Peace.